Welcome back to Investing Talk Podcast. Today we're embarking on a crucial exploration of ASP Isotopes. This is a company really positioned, interestingly, right at the crossroads of several high-growth sectors. A lot of you have asked us to unpack what's been happening with them recently, look at their financial health, and sort of understand their market position. They're quite an intriguing player in advanced materials. So, our mission today: cut through the noise, pull out the key insights, and really give you a clear picture of what makes ASP Isotopes tick, the opportunities, and naturally, the potential risks involved. Before we get into all that, if you find these discussions valuable, please do take a second to subscribe, like this content, maybe leave a comment with your thoughts or questions. It genuinely helps us keep doing these analyses. And if you feel like supporting us a bit more, consider buying us a coffee. Every little bit really does help. Okay, let's get into it. ASP Isotopes. What exactly do they do, and why are they getting so much attention lately? Sounds like a very specific, but maybe quite vital area.
It is, yeah. Fundamentally, ASP Isotopes is a US-based company working in advanced materials. Their specialty is enriching and producing isotopes. Now, you might wonder, what's an isotope? Think of atoms of an element, but slightly different weights. These tiny differences give them really unique properties, indispensable properties, actually, for things like precise medical scans, making faster computer chips, or even fueling those, next-gen nuclear reactors. What's really interesting about ASP is their focus across multiple high-growth areas at once: nuclear medicine, semiconductors, and nuclear energy. It's a foundational space often overlooked.
Right, so definitely not a one-trick pony, that's clear. But in such a specialized field, what's their tech edge? Is it something truly unique they've developed, or are they using established methods?
No, they've actually put in, well, over 20 years of R&D work. This led to their own proprietary enrichment technologies. The main ones they talk about are the aerodynamic separation process and quantum enrichment technology. These aren't just, catchy names. They could potentially change how these materials are made. See, the global supply for enriched isotopes has had shortages for years, often relying on older tech or just a few suppliers. So if ASP's tech can deliver better purity or lower costs or just be more efficient, well, it could really shake up the supply chains for these critical materials. They could be a really needed new entrant.
Okay, shaking up global supply chains. That's a bold ambition. Where are they actually doing this work? Where are their manufacturing sites?
Their main plants are in South Africa. That's a strategic choice, probably for cost reasons, maybe access to materials. And importantly, they own a majority stake, 51%, in a company called Peat Labs. And Peat Labs isn't just some small lab. It's a major provider of nuclear medicine services in South Africa and across sub-Saharan Africa.
So that gives them both production and a direct route into a key market for their medical isotopes.
Smart. Exactly. It integrates manufacturing with distribution, essentially.
So specifically then, what products and services come out of all this tech and this setup? What are they selling?
They've got quite a diverse portfolio, which is interesting for a company their size in this field. First, medical isotopes. Crucial for diagnostic imaging, think PET scans for early disease detection, and also for targeted cancer therapies that try to minimize damage to healthy cells.
Okay, medical. What else?
Second, they produce silicon-28. This is a highly enriched silicon isotope that's needed for the next wave of semiconductors. Think faster, more powerful, more energy-efficient chips.
Right, so high-tech materials there. And the third area?
The third is through their subsidiary, Quantum Leap Energy. They're working on uranium enrichment solutions, specifically tailored for the new small modular reactors, or SMRs. These are seen as key for the future of nuclear power. So it really is a multi-pronged approach, hitting critical needs in healthcare, tech, and energy. Very different industries, but all needing these specialized materials.
Okay, so we've mapped out what they do, and it sounds quite ambitious, that multi-sector approach and the proprietary tech. But, the real test is always the financials, isn't it? What do the numbers tell us? You mentioned significant net losses earlier.
You're right to hone in on that. The figures show a net loss of $32 million for the year ending December 31st, 2024. And it's not a one-off. That loss widened from $16 million in 2023 and about $5 million back in 2022. So the bottom line is they're not profitable yet, which I should say isn't totally unexpected for an emerging tech company that's investing very heavily in R&D and just starting to scale up.
So standard metrics like PE ratio are kind of meaningless at this stage?
Pretty much, yeah. With negative earnings per share, a PE ratio doesn't really tell you much in the traditional way.
How does that compare to their peers? The more established companies in isotopes or advanced materials?
Well, if you look at the bigger profitable players in this space, they typically trade at forward PE ratios, maybe in the 15 to 25 range. And they often show, low double-digit returns on equity. ASP Isotopes is clearly not there yet because they're unprofitable. It's a different stage of the company life cycle, really. The free cash flow is also increasingly negative. But interestingly, that reflects the ramp up in investment building plants, getting operations going all before they hit potentially large-scale commercial sales.
Right, so the negative cash flow is actually the cost of building the business. It's investment.
That's one way to look at it, yes. It's a price of admission for a capital-intensive industry like this.
Is there any positive news on the revenue side, or is it all just about the losses right now?
There is, actually. It's a bit nuanced because they don't always break out detailed revenue like a mature company would. But their latest earnings reports did highlight that revenue growth accelerated.
Oh, why?
It was driven by initial shipments under new commercial contracts they signed with large international customers. And that's a really crucial sign. It shows they're moving towards operational scale-up, turning that R&D into actual sales.
Okay, so still losing money overall because of the heavy spending.
Correct. Huge investments in R&D, getting those plants commissioned, scaling up operations. It all costs a lot up front. But on the plus side, their debt levels seem manageable compared to their assets. And they've recently raised capital specifically to support this expansion.
Which suggests investors still believe in the long-term story despite the current losses.
It certainly points that way. Significant capital coming in implies confidence in the future potential.
So they're in this high investment phase, pre-profit, but starting to see some real revenue. This brings up a key point. What's their actual competitive edge here? And what are the biggest risks? Sounds like a field with both huge potential and significant dangers.
That's a good way to frame it. The potential competitive advantage really seems to hinge on those proprietary enrichment technologies we talked about. Now, the public info doesn't detail specific patents or spell out exact cost advantages, but the idea is their methods could be more efficient or produce higher purity isotopes than older techniques. They're definitely positioning themselves as a disruptor, a new entrant trying to grab market share rather than an established leader. Just having a novel approach in a market with known shortages is itself a differentiator.
And what are the big trends, the tailwinds, pushing this industry forward that they're trying to catch? Why is this market so hot right now?
There are a couple of major forces. First, demand for medical isotopes keeps rising. Diagnostic imaging gets better, targeted cancer treatments advance. They all need these materials. It's tied to healthcare innovation.
Makes sense. And the second?
The second is the push for clean energy. That's leading to a renewed interest in nuclear power, especially these new small modular reactors. And those reactors need enriched isotopes, particularly uranium. So ASP is tapping into both a healthcare trend and an energy transition trend. Very powerful long-term drivers.
Compelling drivers indeed. But let's talk about the flip side, the risks. You mentioned dangers.
Yeah.
What are the major roadblocks for a company like ASP Isotopes?
There are definitely some big ones. This industry has incredibly high regulatory barriers. Think about handling radioactive materials, getting export-import licenses, safety protocols. It's complex and costly.
Right, not something you just jump into.
Not at all. And it's hugely capital intensive. Building and running these enrichment facilities needs massive investment, both upfront and ongoing. There's always the risk that new technology comes along and makes current methods obsolete, although ASP aims to be that new tech themselves. Geopolitics can also mess with supply chains and demand unpredictably. We've seen that with other critical materials.
And their own financial situation?
Critically, yes. The ongoing losses mean they depend on continued funding until they become self-sustaining. That's a risk. And then there's simple execution risk. Delays, cost overruns, getting complex tech and facilities up and running smoothly is never guaranteed. It's a tough balancing act.
Okay, so despite all those risks, they're still attracting funding, getting contracts. What are their core strengths that let them even try this?
I think their strengths are quite distinct. They really do have a first-mover advantage in trying to fill supply gaps across three major sectors: medical, semiconductor, nuclear. That diversification is key. The multi-sector use of their proprietary tech is a big strategic plus. Not all eggs in one basket. Their location in South Africa could offer cost benefits and, through Pete Labs, direct access to underserved markets, especially in Africa. A lot of competitors focus more narrowly, maybe just on medical isotopes, or rely on older methods. ASP stands out by targeting these underserved areas, using novel processes, and playing across those three different end markets. It spreads risk and widens their potential customer base.
Okay, this leads us nicely into recent events, especially around funding. Things have been happening, particularly in June 2025. What should investors know?
Yes, early June saw a significant announcement. ASP Isotopes did a registered direct offering, raising about $50 million in common stock.
50 million, wow.
And it went to a single institutional investor. It was priced at $6.65 per share for around 7.5 million shares. An investment that size from one institution can often be seen as a strong vote of confidence from, a sophisticated player who's done their homework. The money is tagged for general corporate use, working capital, and also specifically funding a bridge loan agreement with an energy company called Renergen. So it's fuel for continued growth.
A big capital injection.
Yeah.
How did the market react initially? Sometimes these large offerings worry existing shareholders about dilution, don't they?
Yeah. They can, absolutely. While institutional backing is positive, the potential for dilution existing shares representing a smaller piece of the pie can put some short-term pressure on the price. Investors often wait to see how effectively that new capital gets used to create value. In this case, the immediate market reaction seemed relatively muted, at least outside specific investment circles focused on this niche. The stock price has shown some ups and downs, but has generally been trending sideways over the past month or so. Suggests the market is maybe in a wait-and-see mode regarding this new funding.
Interesting. So besides the big financing deal, what else has been going on? Any other strategic moves or operational updates?
Oh, definitely. They've been busy. They held an investor access event in South Africa mid-June, always a good sign for transparency. Late May, they put out a shareholder letter. It highlighted technical progress and some key strategic agreements. One notable mention was an agreement with TerraPower.
TerraPower. That's Bill Gates' nuclear venture, right? Focused on SMRs.
The very same. A leading player in small modular reactors. That's a potentially massive link up if it translates into firm commercial deals down the line. They also finalized an acquisition related to a significant helium deposit. Might seem a bit random, but helium is vital for some advanced tech and sometimes found near isotopes, so there could be synergies. And crucially, operationally speaking, both of their enrichment facilities are now reported as operational.
Both operational. That's big. That means production capacity is significantly increased.
Exactly. It signals a real shift from primarily R&D towards active, larger-scale production, a key milestone.
Okay, lots happening on the corporate front then. How has the stock price generally behaved amidst all this over, say, the last year? Has it been volatile?
Looking back 6 months or so, there was definitely significant upward momentum. That seemed to follow news about commercial contracts and their expansion progress. If you look back over the whole past year, the company actually saw pretty strong gains. That coincided with them moving into commercial production phases and announcing those key global contracts. Most of the volatility seems linked to broader sector news or these specific company milestones, rather than, say, some negative surprise from the company itself.
Okay, so the market seems to be reacting mostly to progress and industry trends.
That appears to be the case, yes. Not reacting to fundamental problems within the company, more to the unfolding story and sector dynamics.
So pulling this all together, what's the future outlook? What are the key things investors should be watching for the potential catalysts? And what risks remain front and center?
Looking forward, the catalysts really revolve around execution. Can they deliver? We need to see continued progress at the new facilities, ramping up production smoothly, hitting commercial targets. That's number one. More contract signings would be huge validation, especially with major global healthcare or tech firms. And any positive regulatory news, maybe approvals expanding where they can sell or what they can sell, could really open up markets. Those are the kinds of things that could significantly impact the stock.
And the main risks to keep monitoring, still the same ones we discussed.
Pretty much, yes. Delays in scaling up manufacturing are always a worry in these kinds of complex industrial projects. Regulatory hurdles aren't going away, isotope handling, export-import rules are always complex and can change. General market volatility could affect their ability to raise more funds if needed down the road. And as we mentioned, that recent equity raise, while necessary, does bring dilution risk. The value created needs to eventually outweigh the increase in shares. That's the balancing act.
And what's the general vibe, the sentiment around the company right now? Analysts, online communities?
From what we see, analyst commentary tends to be quite positive. They often focus on ASP Isotopes' potential to disrupt these isotope markets where supply is tight. There's recognition of the strategic need for what they do. On social media, you see a sort of cautious optimism. People seem encouraged by the contract wins, the operational progress.
That's still aware of the challenges.
Exactly. Mindful of the execution risks, it's typical for any emerging tech manufacturer trying to scale up. Most of the skepticism seems to be about the timing. When will they reach consistent profitability, rather than fundamental doubts about the business model or the demand itself. So wrapping it all up, based on everything we've looked at, the summary view might be something like hold with speculative upside potential. ASP Isotopes is definitely in an attractive spot, that intersection of healthcare innovation, semiconductor progress, and the clean energy shift. These are all areas needing more isotopes globally. Their tech aims to fill a critical gap.
Right. And even though the financials aren't profitable yet, still very early stage, that recent revenue pickup from actual commercial contracts, that does suggest real progress towards scaling up. It's not just R&D anymore.
That's the crucial distinction, isn't it? Seeing those contracts turn into consistent shipments is key. Investors really need to watch the execution from here. If management keeps hitting milestones, avoids major delays or cost blowouts, and if those demand trends hold strong, well, the stock could see significant upside over time. But those ongoing losses and the potential need for more capital down the line mean caution is still warranted until they achieve sustainable profitability. It's definitely a story that will take time to play out.
Which brings us to a final thought for you, our listener, as you think about companies like ASP Isotopes. Given the huge capital needs and all the regulatory hoops in the isotope industry, how much weight should you give to a company's unique technology and strategic partnerships, like the one with TerraPower, versus its current lack of profitability when you're trying to assess its long-term potential? It's that classic growth versus value question, but in a really high-stakes, high-tech field. Something to chew on. That's it for this exploration of ASP Isotopes. Thanks for tuning in to Investing Talk podcast, and we look forward to joining you on our next deep dive.